Guys, it's been a minute, and welcome to Traders Lounge. For those ones who have not been able to subscribe, kindly do a subscription so that YouTube can be able to give you notifications every time we produce content like this. Today, I'd like us to tackle a very interesting conversation on the capital markets and the role of the capital markets towards advancement of the business landscape within an economy, specifically a country, as an example. My biggest focus will be on Africa. And why Africa? Because Traders Lounge Africa is entirely focused. Our vision of building this channel is to be able to empower and enable African traders. Really, traders can be a business person or that specific individual who actively participates within the financial markets, and to also help individuals gain more knowledge and insight on how to manage finances. So, for today's conversation, I'd like us to really focus on one aspect. Why do most African economies struggle to build small and medium-sized enterprises? And number two, what can Capital Markets Authority do? What is the role of the Capital Markets Authority towards enhancing these? That is a very interesting conversation, and it's a conversation that I'd like us to really dive into. Now, the reason as to why most of the African economies struggle to sustain the medium and small enterprises is because capital in Africa is very rigid. We are used to traditional model of financing businesses. Which are the traditional models of financing business? It could be something like banks. It could be something like SACCOs. I'm not saying that it is wrong to get financing from the bank to build a business, but this capital is extremely rigid. This capital is very short term in most cases, and to add on top of that, this capital is expensive. It's very expensive. So I'm running a small business. I want to access some capital to build my business. I go to the bank. I am a startup. There's a very high likelihood that the bank, number one, will have it difficult to really advance me capital to run the business. Number two, the kind of requirements that I'll be requested by the bank will be strenuous for a startup. And that is why most of the businesses, statistically, like over 80, if not 90% of businesses fail to reach their second year because the landscape, the business environment doesn't favor them. And if African economies really want to grow their GDP overally and create more employment and empowerment to its population, it is high time we really consider how we can be able to capitalize on the Capital Markets Authority to be able to advance the agenda and to enhance value into these small and medium-sized enterprises. I'll do a separate segment where I'll be diving into market by market by market because it is critical for us to understand the opportunities out here, and it's critical for us to understand that capital is a significant factor to bridge the gap between an opportunity, between a problem, and solving that problem. But we cannot be able to build these enterprises if it is extremely strenuous to acquire capital or to access capital, to build a business with that capital which is expensive, and to sustain the business in the long term if this capital is very, very short term. Allow me to introduce to you the reasons as to why I have a strong feeling that it is better to work with the Capital Markets Authority to create like a specialized purpose vehicle. I've seen it happening now, like in Uganda, they recently created something I'll share in the next episode of this video, but a specialized market that is especially focused on listing small and medium-sized enterprises into a segment. It's like a boutique segment that they can be able to participate in the market. Now, one of the reasons as to why this is very important, it's because if the Capital Markets Authority comes up with that platform, number one, it will help the small and medium-sized enterprises to stop relying on the traditional form of financing. Which are the traditional forms of financing? For example, banks, as I've mentioned earlier, it could be circles. It could be you going to your relatives or your friends to help you in funding your business and help it build up. It could be getting very expensive loans that at the end of the day kill the profitability and the sustainability of the business. But then again, there has to be very proper laid down framework on who can be able to qualify to be part of the participants of that pooled fund. Who can we bring into the platform? Which company can qualify to form into that? Because you cannot just start up you cannot just get up and develop a startup and expect to mobilize capital from the public. The risk of the business of an investor investing into that business is much higher. So that is a critical factor that has to be considered. But that said and done, it is extremely important because of the first reason, which is to stop businesses to only rely on banking as a mode of financing. When you look at the ratio, economies that perform well, like in Africa, South Africa is very mature market, because you find the ratio between access to capital from the capital markets vis-a-vis the traditional markets like banking, you'll find the capital markets ratio is higher than the traditional forms of lending, which includes the banks and the likes. And that is why you find it is very easy to build a business in South Africa versus other small African economies. So that is number one. Number two, when the Capital Markets Authority creates that specialized market for small and medium-time enterprises, it will enable access to cheaper credit. Why is it cheaper credit? Because when you go, for example, to the typical traditional modes of financing, like the bank, the interest rate the bank will charge you definitely will be higher than what you can get from the capital markets. Number two, this interest rate is subject to several factors that are beyond your control. For example, tomorrow the government can have what you call this thing. The government can come up with regulations that can make and change, rather adjust the interest rate within the market to directly or indirectly affect your loan facility from the bank. The bank tomorrow can come up with measures to be able to protect their loan book by adding additional charges to your loan facility. Whereas in the capital market, it purely depends on demand and supply. Your share price, the value of that share for your company has an advantage of growing with time. It may come down, go up within the short term, but generally, if you're doing the right thing, if your business has strong prospects of growth, then the potential of growing will be better and cheaper in the long term. The third reason as to why I strongly believe this conversation is critical is through the capital markets specialized market fund for small and medium-sized enterprises, it will allow these small enterprises access long-term working capital. Why? Because most traditional capital is normally short-term. 1 year, 2 years, 3 years, 5 years if you're lucky. Rarely 10 years in most cases. So, and when you look at it in the long run, you really need patient capital to build a justifiable brand in the market. You need patient capital to be able to really get your business into a break-even and a sustainable and a sustainable framework. You really need long-term capital, because long-term capital can be able to absorb the short-term fluctuations of the business, either in terms of profitability or in terms of uncertainty. And then the fourth reason, which is extremely important, is it shall enable an increase to access of financial securities for the public. The public will have more options. If I am a trader, or if I am an investor, and for example, I am looking at the Nairobi Stock Exchange, it will give me an advantage when there are more options for me to select where to put my money into, vis-a-vis small, very few conglomerate stocks that gives me a very rigid way of diversifying my portfolio. What's your take? Let's have a conversation. Drop your comment in the comment section and I'll be happy to engage you on a one by one. Otherwise, welcome to Traders Lounge and let's keep the conversation burning. Remember, at the end of the day, stories and conversations are told for lessons to be learned. Thank you guys and have a great week.